Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 11th. Mike Boutros with you on the horn. Pete, Steve, everyone in the room, good morning to you as well. So we've gotten some really nice moves. The dollar has finally made a breakout. We'll go over those levels in a moment, already approaching the first sort of level of interest that we were looking at on the upside. But we got a stacked calendar today. So DXY will be starting off. We'll hit Euro, Aussie, Kiwi, a look at the dollar CAD breakout, sterling, gold, dollar Swiss with a breakout, oil, and we'll wrap it up with dollar yen and Bitcoin. Do let me know if you have any other questions or trade setups you guys want to review. There's a lot on the docket, but let's go ahead and jump right in. First up, here's what the DXY looked like. I guess this was last couple days ago, right into the open of the week. What I wanted to highlight first was this weekly chart. You know, we've been looking at this weekly chart ad nauseum for the last couple of months, highlighting this 94.47, 94.65 resistance zone, a basic 38.2 of last year's drop, and the basic opening range low for 2020, the March low, give you a nice little resistance zone there. Aside from that, I've been telling you guys about this red slope, the 2011 original slope that dictated all of these major shifts in the dollar index over the last couple of years. This is the first buckle above. Support, break below, resistance has been resistance all last month. If this break is legit, we're closing a weekly close above this, it validates a breakout and it continues to shift the focus towards the upside. Good morning. Hey, amen. No worries. Good to see you as well. Always a pleasure. But the initial focus right now is going to be that high from 2017. Okay, that swing high from November, October. Nice little pivot there into the open range low for 2019. Again, bounce, pivot, break, acceleration. That comes in at 95.15 on the weekly chart. Just higher is going to be that median line. Okay, so all things held constant from an objective standpoint, from 1,000 feet up, we're constructive above 94.47, especially now because that level converges on that original 2011 slope and the 25% parallel. Okay, top side level is 95.15, and again, that median line is going to be determinant on time. Basically, this week it's about 95.50. So that's from 1,000 feet. As you get deeper, the trade just gets cleaner. Okay, got an objective breach of the monthly opening range. We were talking about that. Here's what it looked like again into the start. We talked about the monthly opening range taking shape just below major resistance. Not only was it that major confluence zone we just looked at on the weekly charts, but it was also the September high and the October high. So any way you slice it, it's a multi-month breakout. Okay, so again, highlighting 94.47 as near-term support right there. Let me just drop a marker for you there. Okay, and the November opening range low is now your objective bullish inval. It would be an objective monthly opening range reversal if we broke below 93.81. So again, 95.06 right here. This is the March low day close. Just higher, the upper parallel converges on the 2019 low day close. That's 95.50, exactly the same level we were looking at on that weekly chart. Okay, on this advance right here, you're at the first level of resistance. So I wouldn't be too surprised if you see some kickback. Again, you're constructive above this level. Next marker up, 95.51. Here's what it looks like on the intraday charts. And here's what it looked like into the start of the week. So again, just a super clean play. Obviously, we had to adjust the slope. You did dip below that November open, quickly recovered. Opening range break for the week yesterday, okay, with that move higher. Here's that 94.65 break. Here's 95.02. 2019 low, I think on the daily chart, we have the March low day close. So both converging in a pretty nice level right around 95. If we breach to the upside, a 1618 of the extension comes in right ahead of that 2019 low day close. So 95.48 into 95.55. That's your next upside target if this breaches. Again, it looks a little tired. We've been overbought for over a day here. So I'm not going to add to any positioning here. And if you're holding some longs, actually a good area, you might want to just start taking a little off the table. If not, at least bring your stops to break even or better. If we do pop from here, that's your next level. Now, as far as the economic docket is concerned, guys, we're pretty quiet for the end of the week. Tomorrow you get Michigan consumer sentiment. That's the preliminary read for November. It's expected to uptick to 72.4 from 71. Not expecting that to be a major market mover. The biggest shock to the market, obviously, this week was CPI. And what's interesting is PCE didn't even do it, which is the Fed's preferred inflationary gauge. CPI coming in well above expectations. 6%, guys. That's the highest we've had since the 1990s. So the inflationary story is starting to be a little bit more comical now, right? We've been saying it from the start. You heard it here first, folks. But yeah, this is not a transitory story. In my humble opinion, the energy price increase that we're seeing hasn't even filtered down to consumer products yet, and that trickles down. You're going to continue to see prices move higher. So with that said, looking at the dollar now at the 95 handle, could get some kickback. Okay, not surprised if you do. You're constructive above 94.47. Next upside target, 95.40s into 95.55. That is DXY, number one. All right, number two, here's Euro. The last update on Euro, I haven't really been a fan of this because it was so quiet. Here's what Euro looked back on the 4th into the close of last week's trade session. Weekly chart had us, and I was talking to you about this. I didn't really like where this was. There wasn't a fresh opportunity, in my humble opinion, to play a decent short. But we did highlight this key range of support on the weekly chart. Basically extends down to 1445 into like 1490, which is the 50% of last year's rally. It plummeted right there. Let me just go right to it. Here's Euro on the weekly chart, right into support. 2019 objective yearly open, 50% retrace of last year's rally, downtrend, support. So the pitchfork slides right in there. So again, right now, right here, I don't want to be short Euro per se, not at least pressing a new short. If you're holding a position, take a little off, bring your stops in, but this is a major inflection point, okay? If we break below this, it's likely to be an accelerated drop, but until we do, you want to be cautious of that drop there into 1445. So when you look at this back on the daily chart and on the intraday, here's what Euro looks like. It's not as appetizing here, okay? Again, clean break of the monthly opening range for sure, but the first level I was looking at was 115. Again, that 114.90 level, 2019 high day close was right there as well. You can see it right there. And then that slope, right, for the pitchfork that's on that weekly chart. Just lower is the 19 open at 1445. So you're in a problematic zone here of support. Again, one of those scenarios where if it breaks, you'll see a slingshot, but as far as new positioning, this is not where you want to start to press fresh shorts. Okay, that was the idea into the start of the week. I mean, I'm not sure from anything from here. I would have been out at 15, but this is the next sort of problematic area. And it's interesting because you're seeing dollar index at its next problematic area already. So expecting some near-term inflection shouldn't disrupt the trend, but near-term might give you a little kickback here. Here's what it looks like on the intraday chart. And here is what the intraday chart looked like last week. So here again was the daily chart, clear break. That was the level I was looking for. We ran right through it. The next level down is the 2019 open. Here's what it looks like on the intraday. Okay, here's the pop. First bounce on Friday looked like a washout, which is why I was looking to see if we would get a better rally. If you guys remember, I was actually looking on Monday for possible exhaustion into this mark for re-entry. Didn't even make it that high. Okay, and we just broke the weekly opening range low. Here we are. Again, if you're holding shorts, look to do something at 1445. You're still bearish below 1530. Next level down again, that slope comes in right below, right into the 14 handle. Any questions on euro? All right. So that is 1 and 2 for the majors. That was the last one from this update. All right, let's hit some of the other commodity pairs that I covered from last night's update. So Aussie, or this, excuse me, was from the update early in the week on Sunday. Aussie, beautiful move. Here's what it'll look like into the open. We were looking for possible exhaustion into 74.30 for the short. Didn't quite get a rally that high, and it just sort of just tanked. Okay, here's what it'll look like. We turned right ahead of it, right? Let me show you the side-by-side comparison here. So 74.34, right? It kind of screeched, turned right ahead of it. Here's the breakdown. You saw a break of the weekly opening range continue. This was my big level. This is a big level for me. It's a 618 retracement. It's also a nice pivot around 73.28. You guys remember what that was? That was like multiple monthly opens came in at 73.29. There was a lot there, okay? A lot there. The low day close or the low close for July, again, the August open was right into that level. Here's what it looks like today. If we close at these levels, technically you would continue to favor the downside. At this region here, momentum looks tired. And again, with all the account of that we just looked at with the euro and the dollar, again, stretched, guys, stretched. It was a decent short, bailed too early, as I did on most of these, but you know, we'll have to see how this pans out. No Aussie data worth of note all the way till next week. So actually, there's not even any Aussie data of note next week. So look for the dollar to drive here, but it's coming into downslope support just lower. Ideal scenario, again, since you're asking, it would be sort of a fade, right? I don't want to just jump into that, but if you were to get another drop, an exhaustion low, maybe some divergence with a trigger break, maybe a decent rebound, but you're trying to catch a falling knife. I'd rather wait for a more concrete bounce off of a structure, so either slope support or a breach back above this pivot. If we close today back above this, just for argument's sake, that would be like, again, another quintessential, exhaustion trade. You look for a little bit of recovery before you get back in. But what a clear cut trade. This was really well performed this week. Questions on Aussie? So Kiwi with a similar scenario. I didn't even get a tag on this. So here's what it'll look like on the weekly chart. We talked about this early in the week about the major resistance zone that Kiwi was coming off it. It was the same with Aussie. It was why we were looking lower in Aussie. That was beautiful. Okay, 75.40 was 100 off the low, the 52-week moving average, downslope resistance, the opening range low for the year. It was all lined up there. So a beautiful, beautiful level for it to turn. I love how this played out. 72.92 is your first area of interest. That's the 618, the entire rally. Downslope support. Look for something here today. All the majors, guys, are reflecting the same risk, that the stretch is coming into a near-term inflection point. So we need to close below 72.90 to continue favoring the downside on a weekly standpoint. Right now, that's your near-term support in Aussie. Kiwi's at the same thing. Not quite at support, but I wanted to show the reversal off resistance. Beautiful zone, 100 off the low. Again, this was a 618 off the high, confluence zone. The yearly open spent 3 weeks testing that zone before moving lower. Finally buckled back below the 52-week moving average. Now, if this breakdown is legit, you're looking for 69.40, major pivot zone, uptrend support right there. So Aussie has us at a nice near-term support. If you take a 618 of this, it's down here still. Oh, excuse me. You know what? I need to update that. There we go. 618 is a little bit higher, okay? Right near 69.40 still. So keep your eye on that for Kiwi. That's from the weekly chart. Here's what Kiwi looks like on the daily. So the breakdown, again, nice little break here of the monthly opening range. It happened on November 10th. It also was a 38.2 and uptrend support. Here's the break. Forget the 50, but look at that 618. Yep, right there. So 69.90s, just a little bit lower. You have the 618 of the rally, and again, uptrend support. The intraday chart just looks ugly. Here's what it looks like now. Here's what it looked like earlier in the week. So I scrapped this pitchfork for just some basic slope off the highs to clear this up a little bit. Break of downslope support, I always tell you, oftentimes can be the sharpest part of the drop. Here's another almost 1% drop. We got that 618 just lower along with slope. Look for downside exhaustion near term in Kiwi. Questions? Okay, so that is Aussie and Kiwi, and I believe that was the last update from that night. We'll go over, we have more updated gold levels from that. So let's move on. Next up, here is dollar CAD. So major breakout, dollar CAD on the weekly charts. We were eyeing this major key region right here. We were heading into the start of the week. It was a 38.2 retracement of the drop from the yearly high. It was the 52-week moving average. 2540 was the level that we were looking for on this pop. Here's slope. So again, love the breakout, but it's already into a problematic zone for me. So the weekly chart, I just want to show you that slope, that median line for the larger formation we've been following multi-year. We're there now. Watch the weekly close as it pertains to this zone. If we close northbound of this, you're still looking for 27. That's just the yearly open, right? 618 of the drop also is at 26.96. It's a really nice target if we break higher. But first things first, you're at near-term resistance right now. Here's what dollar CAD looks like on the daily chart. Don't quite have that slope here, but I just want to show you how this worked out. Again, a breach of upslope resistance, oftentimes the sharpest part of the rally. Here's the break above 2540. So just higher, again, is that 50 of the drop. Don't really have much on the daily until we get into that zone. Okay, here's the intraday chart. 2590 is just a decent pivot zone from way back here. It was the high from July of 2021, of this year rather. Decent pivot, right? Resistance, breakout, support, support, support. When it breaks, both sides acceleration. So you want to see a level of low tolerance, 2590, and then just ahead of that is that 2618 level. So if this breakout is legit, near-term support's at 2530, you want to stay constructive while above the upper parallel. Former resistance, now support. You have 3 tags on this. So I'm going to want to, any pullback should stay above that top side levels, 2590 and 2618. Beautiful breakout. Now, if I see that, if you got faked out on this yesterday, I don't blame you. However, it was kind of a very strong tell. Okay, so we were talking about the weekly opening range. Here was the update. We were talking about the weekly opening range, which had taken shape. If we go to the previous update, I just want to show you how this played out. So, that's too old. Okay, so we were talking about on Monday's webinar, or Tuesday webinar rather, the weekly opening range right here, right? It broke to the downside, which would typically give you a bearish bias heading to the close of the week, but it got defended right at that slope. 1 touch, 2 touch, 3rd touch, and then reverse sharply higher. That's an opening range reversal. When the weekly opening range is well defined, you break the low, then on the same candle, you break the high. That's weekly opening range reversal. So you're looking for a Thursday, Friday high. It's Thursday. So not something to test on the long side from here. If you are long, those are your extension targets. You want support ahead of here. If you're looking for a new position, really short term, you could get a spike if the opening of the US trade session gives us that push into 2590 and then failure into Europe, that might be a decent pullback. Ultimately, you really are looking just to reposition for another spike higher if this gets pulled back. Okay, that's dollar CAD. Any questions on Loonie? Big move. We telegraphed that one pretty well. So that one worked out pretty well. That's the breakout on dollar CAD. Sterling is next. 4, that was 5. Sterling is number 6. Okay. So for the British pound, we had an interesting move on the breakdown also today or this week. The only thing that was like really impressive on this was the slope. Look, Sterling on the weekly chart basically was tempting a break below that 2017 high week close. My concern was that this was a major inflection point for many years. Okay, and in fact, this year, every time we touched it was in January, got a mean reversion type of rebound. Here was the last attempt again back in September, broke well into the lower parallel, closed well above it. Even last week, tempted to break below, but we closed above 34.90 again. Here's a bounce and then a reversal. You're looking for the lower parallel, just lower. Big support comes in just lower at 32.45 into the 33 handle. Last year's open, okay, the 100 off the high, so 2 equal legs, 1, 2, 3. The 618 is a longer term retracement, excuse me, from the 2016 drop. That 618, which has been so pivotal, still is in that zone. So you got a 40 pip zone of key support on the weekly chart, just lower. Here's what it looks like on the daily. Didn't have quite, what's the word I want to say? The monthly opening range never panned out here. Okay, the month opened and then you got that massive drop, which closed below slope support. We were looking lower. The bounce never got back into the yearly open, and then that dropped lower. So we do now have to kind of rejigger this. But at the end of the day, forget this slope right now. Forget that retracement. At the end of the day, we're looking for downside exhaustion, either into the slope or just lower into that 33 handle. Might be a decent recovery trade for Sterling. Today, we did get the 3-month average GDP coming in lower than expected at 1.3%. The preliminary year-on-year growth for Q3 came in lower at 6.6% versus 6.8%. There's a lot of tailwinds here continuing to help this trade lower. But the Sterling decline here may, again, it's the same trade as all the other majors, guys. It's stretched, super stretched. Here's what it looks like on the intraday chart. The slope has continued to hold out pretty well. So again, here's what it looked like yesterday. Here it is. Here's what it looks like now. So we broke below. Oh, slight adjustment to this slope. Did I adjust this slope yesterday? I did. Slight adjustment to this slope. Okay, to bring that up to the actual just touch of these two. Break of that pivotal area at 32, what was that, 34.25, 34.10? You know, like what is that? We broke into it, there's a lower parallel, and then the bounce. So it just looks, exhausted. And a break above from oversold conditions, if we pivot back above 34.25, that's actually in near term bullish trigger. Now again, if you do take any recoveries on these, you want to do like a quarter X, whatever your leverage side typically is. But you know, that's sort of what you want to see. We're getting divergence. If we break back above 30, pivot back above 34.25, it could get a little bit of recovery, but you're still bearish, excuse me, below 135. Man, I'm getting my tongue twisted all up today. All right. Quick look at Sterling. All right. Gold, number 7. Let's get talking about gold. How beautiful was this? Hey man, you're my gold trader. Every time I see you, I'm thinking that you're tracking these gold trades. This has been an exquisite breakout. The levels are ridiculous. And I just wanted to highlight this same weekly chart we've been talking about for months, and the 2 levels we've been talking about since the initial low that we made back here in August was 1825 and 1850. If this closes the week above 1850, I do think you're marking breakout, period, right? You got basic slope off the early highs. We took the secondary high because you had a better touch there. This is the objective high week close for the year. Again, not Mike Boutros' opinion, not Jamie's opinion, fact. And we just pivoted back above the 52-week yearly moving average and this slope here. Do you see this slope that we added? I'm just gonna make that a bit obnoxious for you real quick. You see that slope? Support, support, support. Couldn't even find a break below. When it did break below, it was resistance for the last 3 weeks. This pivot here means that we've pivoted back above that slope of influence. Okay, so it keeps the focus higher. All of these slopes, by the way, guys, that you see here in red, believe it or not, are all derived from these two reference points. The original slope we've been following for how many years now? Right? Nice, beautiful move. So that was the weekly charts. Iman saying, wow, I was long at 1814, open, but out yesterday, 1848. Thank you, Michael, all from your setups. Honestly, I appreciate that, Iman. Again, they're not my setups, Iman. It's the market. I'm just helping you find them. It was a beautiful setup, though, for sure. Here's what it looked like first on the daily chart. I'm just so mesmerized by this and enamored by the way that this worked out. The level that we had highlighted early into the start of the month was 1809. If you remember, that was it was a pivot level for the open of the month back in September. It was the highs back in that dip. We tested it back again last month before pulling back. Here was the breakout. And again, that blue slope that we just looked at, right? Resistance, resistance, there was the breakout. So the first level of importance, 1825, 1830, stuck there for a couple of days. Next area, 1845, we broke higher and closed below yesterday. So we said, even if this thing corrects back to 1830, you're looking higher for 1865. Here we are again, the 786 of the drop from the highs we made back in June. Okay, that's a big mouthful, right? Where do we go from here is the question. Guys, watch the daily close. If momentum manages to close above 70, price closes above 1865, it's resumption. If prices fail to close above 1865 and RSI closes below 70, in my humble opinion, that's near-term exhaustion. Here's what it looks like on the intraday. Okay, so I'm going to zoom this out to the 240 because the price action is pretty compressed, but here's what it'll look like. Here's the open of the week, right into that 1830, 1825 level. Boom. What? We got high inflation? Get out of here. Is that surprise? I don't know why it was, but here's 1850. Here's 1865. Pullback found support. Just snap that level for you. Pullback right into the resistance level again. If we breach this level, it's the same as the trades we just talked about. A breach of uptrend resistance would likely fuel another ripper. Okay, so in my humble opinion, over the next 24 hours, it's literally make or break here. If we push and this breaches, you're likely going to get another stretch like this, like we did last Friday, 1898 and 1910. Excuse me, 1918, 1920 are your next two targets on the upside, but that's all consistent above 1830. So bullish invalidation, near-term support, breakout targets. Feel free to take a snapshot of that. Nothing's changed from any of the levels that we highlighted on the last gold update. Playing out pretty well. Questions on gold? Well done, man. That was a great breakout, man. I loved it. Loved it. And again, you're going to hear it's so funny because you see all the fundamental quote unquote traders scurrying all about when this stuff happens. Oh, well, you know, there's guys even on Daily FX who swear gold doesn't catch the inflationary bid anymore. It's Bitcoin, look at gold. That was a time, guys. And we do examine these kinds of things. We never dismiss anyone's assumptions, but we look at price action. And yeah, to the start of earlier this, in the summer, the inflationary call wasn't really catching that bid, but you also had every single analyst, Fed member saying it's transitory, it's the supply chain disruption, right? It's COVID, right? Well, here we are a couple months later, CPI is at a 30-year high, and everyone's scratching their head saying, whoa, we have higher energy prices clearly on the docket. This is a recipe for some stagflation, for a serious problem. If you account the rise in inflation, guys, with the rise in wages that they've been talking about, you're actually negative on the year now, okay? The extra money that you're earning compensated for inflation is actually lower. So this is this is very alarming. Again, we're not economists, we're traders, and this offers plenty of opportunity for us. But that's all to say the bid for gold is sort of returned at this point. And as long as any pullback stay 1830, you're in a constructive trade. All right. Questions on gold? Watch out here. You're still vulnerable here for a pullback, but at the end of the day, I think the damage is done here. So that is number 7. I'm going to dip back real quick into a couple currencies, then we'll hit oil. But real quick on dollar Swiss, who knew? This sleeper cell here, okay? We started talking about this a couple of weeks ago. I don't know why. I just wanted to highlight this downslope. I wasn't involved in this. The only thing I really was focused on was this zone of support, which ended up holding. Do you guys remember? I think everyone in this room looks pretty familiar that you've been here for a while. You guys remember last year, the 90-90, 90-80 level debacle? We talked about it for like 6 months. 90-90, 90-80 was a major pivot. We straddled that zone for so long. There was a couple of fibs down there. Fast forward a year later, a 1618 off the high, basic trend support off the lows, and the broader downtrend, guys. The pitchfork off the highs. That 75% parallel right there. So we came into the month saying, listen, we're at a big inflection. Let's see what happens. Ideal scenario, it sets up a nice monthly opening range right above support, and you'll get the pivot. If it breaks lower, it's going to be a shot. If it breaches, likely to be a runner. Here's the breach yesterday, not only clearing the monthly opening range highs, but closing above basic slope resistance. It's a breakout. Okay, so really nice play. Again, I didn't catch this one. Unfortunately, I got a lot going on with a home purchase and a baby on the way, guys, but we are in a home sale. So kind of missing some of these ancillary moves here. But at the end of the day, very clear technicals. And even so, you look at this. Oh, did I show you this on the weekly? Swissy on the weekly, right? You had the 52-week moving average right there. 90-80, right? So just such a beautiful level to find some support, and we found it. Now the rally on the weekly chart has us right at the 75% parallel. So watch today's close. On the daily chart, looks like this. On the intraday chart, looks like this. And this is what it looked like earlier this week. Okay, talked about that 1618. This looked like a break of the weekly opening range, but we noted that, look, even though it's a break, you've got the lows right here for November. I mean, it's a basic monthly low. Didn't even make that run. Here was the break. And it was all clear with the breach above 91.50, which was our bearish invalidation level. Pop higher. Here's the 91.93 level. And we're kind of in the middle. If you bring the 50 in, it's basically where we are now, just lower, right? And you have that swing high. So it could be an exhaustion trade. What I'm looking for in a trade like this, once you break out, is there any upslope we can follow? Is there any sort of guidance to the advance? And I'm hard pressed to find one. Let me see what this looks like. Possible. Not the most convincing. It's going to reverse it. It's going to invert it. Yeah. I'm actually, we could possibly work with something like this. So we got Initial pivot right there at 25% break. There's the median line holding, breach. So it put resistance right here. It would put support right here. It would put bullish inval right here. Topside target at the 618. All right. Now, this doesn't converge on slope. If you get the kickback, it'll actually be pretty nicer if it happens maybe later next week. But that's all to say that the initial advance, again, just like all the other majors we went over, it's kind of getting stretched here. So if you're holding that long, if you're playing that breakout, a good area to reduce some of your exposure. Again, if you're long from anything south of here, okay, I definitely go break even, or at least bring your stops up to that former swing, to that former pivot at 91.90. But nice little exhaustive pump here. The other extension I would want to take into account would be this. And we already broke the 100, and the 1618's up there. All right, we'll leave that there for some color. 92.50. But boy, oh boy, what a nice break! What a nice break on all time frames. On all time frames, even the weekly. Questions on Swissy? All right, last from the FX front, that was number 8, is dollar yen. So dollar yen has been doing what dollar yen does, okay? And this is why I have an affinitive hatred for this trade. I didn't get stung on this, but let me tell you, if I would have been in this, I would have been really, really pissed, okay? Here's what it looks like. We talked about the break below really steep uptrend support. Now, again, these really acute angles don't tend to give you much play. I've stated that many times, but we thought we could at least get a touch of uptrend support, right? Didn't even get that. Didn't even get that. The rally right now is failing, or at least is testing. I don't want to say it's failing at the objective monthly open. It's basically 1405, literally 114.05. So these dots are. So for all intents and purposes, you could say this is the monthly opening range and that you're right back at the monthly open. But man, what do you do here? Key resistance is still 1445, 1492. That's been the level of resistance for the last month. Big, big level. 2018 highs, a 786 of the retracement, a decline off the highs we made back in 2015. Lots here, right? It's dollar yen, you know? Here's what it looks like on the daily chart, or on the intraday rather. It's a mess. It's a mess. So here's what I showed you guys back in the last update. Dollar yen right here. We were trading in this parallel. We opened the week. We broke below the 236, and we had that 100% extension there. I said, all right, let's watch what happens here. This might be actually a decent exhaustion low to play the rebound. Well, look what happened. Buckles below that slope, tests that slope as resistance, and this is the fake out here, which would have you looking again for the resumptive move. Didn't happen. Couldn't even get back into the lows. Reversed right through. Dollar strength taking it all the way up. It looks like a 5-wave rally. I think you get a break out of this. So I think on the pullback here, you look to fade. So let's clean this up a little bit. Forget that 236. 38.2 never got stretched. The 100, it's not going to do us any good at this point. Quick retracement. Near-term support. Ideally, you don't get this low, but if you get into the median line, an area of which you'd look for possible support. Why? Well, here's your weekly open. Here's your weekly opening range high. So it's pretty decent with that 38.2. You got the median line in there. So if this pullback exhausts here, that might be a decent reference point to reassert. If not, that's like your last ditch effort. And again, this is dollar yen. And I say that with great respect. If it breaks 1327, look at the lows on the left, okay? It's a pivot. It's going to probably do another dunk towards 112.56. But if it's going to hold, these are the levels I'll be looking for an exhaustion low. Topside breach, again, you can't dismiss 1450 to 1490. That is huge. So take it for what it's worth, guys. It's not something that's on my menu as like an executable trade right now. I'm looking for the decent pullback here. If it drifts into 1360, I'm looking for reaction, but low conviction trade. Low conviction trade. I know some of you are diehard dollar yen traders. You know, take that analysis as you see fit, but it does look like a nice clean 5-wave up right off that low. So I do think that you look to fade weakness from here. Okay, that is number 9, and everything I've got on the FX front. Let's hit oil. The oil trade is largely stuck in a range right now, and that's not just apparent by what's been happening today, but by the monthly and weekly charts, by the weekly and daily charts. Here's the weekly. Okay, we came off of massive resistance at 85.61. We talked about that. It's a 2013 swing low, uptrend resistance for this year, 3-point touch. Okay, here's the pullback. Last week we failed and held that 75% parallel. We tagged that 75% parallel again this week, but the rally faltered and it failed to push back into that resistance zone at 85.60. What does this mean? Right? You've got ongoing divergence. Is this a blowout for the rally in crude? Should we look for a deeper pullback? Well, listen, at the end of the day, even if this slope breaks, this is constructive above 74, basically 75, 74.94. Even if it breaks that low, I don't think it will, but even if it does, it would still be within the realm of the broader multi-year uptrend, and it'd still be above uptrend support. Okay, top side levels, again, you got slope convergence near 88.75 and 90.68. That's the 618 major resistance. So the levels are well defined, right? Let's get into the daily chart. Here's what it looks like on the daily chart. Objective, right? Let's take all, subjectivity out of it. Here's your monthly open. You set a high, you set a low in the first 4 days. The monthly opening range is set. Okay, there's no need to complicate this any more than that. We've tested the monthly opening range highs three times. Here's 3 days at those highs. The low only has one test, but if we do break, we're already making the assumption we're coming off of uptrend resistance, so we'd be sure looking for uptrend support. And that's the basic trade for crude, guys. That's all I'm focused on over the next couple of days. This is where retail gets chopped up, understand. It's a very strong uptrend. They had a 9-week persistent rally that fizzled out. There's people trying to call the highs, and there's people thinking, oh my gosh, we're going to go to $100. I do think we go to $100, but it's not going to be a straight shot. So treat this as it is, and it is a range. Now, the other interpretation I just want to show you is this acute angle. Again, I don't like these really acute slopes, but here's the break, pull back. We tested it as resistance on the 4th. We tested it as resistance again here on the 9th and yesterday. That slope in blue. Okay, so if this is basic technical analysis 101, slope support becomes resistance, the risk is still for the dump. The risk is still for the dump. Add to that, guys, that yesterday actually was an outside daily reversal, okay, off of the highs. That typically is a bearish mark, okay? So if we are going to get a decent pullback, I think, that was the onset of it. And it's a tough call because me, guys, I've been telling you, I'm very bullish on energy across the sector pretty much because of not just where the technicals have been lining up over the last couple of years, but just also the macroeconomic outlook, the domestic policy outlook. I mean, you name it, right? It doesn't seem like we're going to get any abatement soon. So the correction could happen, and I'm still thinking that risk that we flagged yesterday is for a deeper cut. Ultimately, it is to buy, but that's the risk near term. So treat it as it is. The monthly opening range remains preserved. Here's what it looks like on the near term. Okay. And here's was our last update. So I've dropped this pitchfork since then. That's this low. But we simply rallied right back into that swing high, right back into the November open. Here's the November opening range highs, and here's the pullback. So if you hold it constant, here's your November open, guys. It's a simple range. It's a simple range. If that reversal candle yesterday was a flag that we are in trouble, resistance ahead of 83.30, a break below 80 essentially puts you on the way. Looking for 76.34, 76.87. This would be an area of which I'd start to look to rebase. But that's what we're looking at here with oil prices. Let me just see what this looks like. Bear with me one sec. Huh. That's interesting. Guess what? Highlights the same level I just told you. Bearish invalidation. Downside break from here, which is the median line, would risk and threaten a deeper cut towards that 76.87 level. Okay, watch this. Not enough, there's not enough information to weigh heavily on this and love this pitchfork as I would love to. But for right now is a good frame of reference for a possibility for a slip well below 83.70. Questions on crude oil? Okay, number 10. Last but not least, here is Bitcoin. I wanted to just show you, again, here is the daily chart. We've been talking about the 2020 October price parallel that we've been following ever since that breakout last month is still pretty on point, okay? Now, the magnitude of the pullbacks has been exaggerated here because we're a bit higher, but at the end of the day, you're constructive. Nothing's changed since what we talked about earlier in the week. You're constructive above 58,900. I don't like to see this, and in fact, this does risk washout still, to be quite honest with you, just looking at the momentum profile and how this has been trading. But all things held constant, if we close the week above this zone, you're still on tap. 77,600 and 89,600 is on the upside. Near-term support 58.9, like I said. At this point, I wouldn't really worry about this 100. Broader bearish inval needs to be with slope, so near that high we made from September. All right, now within this broader daily chart, right, within this broader trend, we've been following another slope here, and that's what this is. I know this chart looks really messy, but I just wanted to highlight this is the slope you see on the daily. I just deleted it. This is the tight slope that we've been following. Remember how I told you, even though this broke, let's stick with it. Let's see if it holds. It's continued to hold for over a month. Here's resistance at the 25% parallel, break, support at the 25% parallel, resistance at the median line, support at the lower parallel, resistance at 25%, support at the lower parallel. You get it? So if this breaks, if this is a fail and we decouple and we break back below this high day close from last month, into the close of the week, that would be the spill. All things held constant, you're still holding uptrend support. Let's see. Two things to note. Okay, a lot of people have been talking, and you've heard me say it too, that actually Bitcoin has been catching the inflationary bid, right? In fact, when we first started talking about, and CPI first started rearing its head and the PCE numbers were coming in high, it was actually Bitcoin that caught the initial flood, right, for the inflationary quote unquote hedge. You're seeing that abate a little bit. I would have liked this week's price action to really give us that assertive pop through this resistance. So the risk is for a little bit of a setback. You don't want to get short in these types of trades, but areas of interest for possible reentry is what I'm focused on here on the pullback if we do get it. Just as a disclaimer, I've been long still, so I'm in this one for the long haul. Any questions on Bitcoin? Okay, I spit out a lot at you today. We got a lot of interesting stuff to cover. Just one tidbit for anyone else who's trading. I don't know if you guys have been trading or anyone here is trading stocks, but one thing I've been really interested in, I was sending this out to a couple of news agencies yesterday. They were asking about it. I have Bitcoin at an interesting, or Tesla at an interesting section here, or an interesting level. I got long yesterday on this dip. Part of it was luck, but I just initially threw this slope on there and identified a median line that may be in play. So based on this, you're looking for 1085 resistance, 1145 key level. That's going to be your breakout and resumption move, but that's also the last target. Key support, bullish inval. So some really clean technicals manifesting even on the stock side and single shares over the last couple of days. So quick look there. So guys, as far as stocks are concerned, here's what the SPX looks like. That consolidation that we looked at actually did break to the downside, right? We looked at this really, really mini consolidation break, looking for slope support. We've broken below that and pivoted there as resistance. So watch this here today. If we get failure into 46.75, 46.76, you're probably going to see another dump. Again, not a popular call, but that's the risk. Ultimately, we would need to sort of pivot and close back above this level to mark resumption. And there's plenty of room on the upside, but near term, that's one thing you want to keep in mind. All right. Okay, if there are other questions, we'll go ahead and wrap it up there. Stay tuned, guys, into the close of the week. Some of these are kind of stretched. So if you've closed them out or if you've missed the trades completely, again, don't start chasing here. Let's get some back and forth here as we close out the week. It's been a very, very nice stretch for the dollar. And I do think you're reaching some of those major inflection points. So keep an eye out into the close of the week. Thank you, Eman. Enjoy your weekend to the maximum as well. Pete, Steve, everyone in the room, have a great day. Enjoy the rest of your week and have an awesome weekend. I'll see you guys on Monday. Cheers.